Hello folks, this is David Schlossberg from Assured Concepts Group with our August 2017 Educational Economic Update. In this month's video, we'll talk about some of the economic headlines that influence markets in July and give you some insight into what they could mean for you as an investor. After a lackluster beginning to 2017, the U.S. economy quickened this spring, powered by very strong consumer spending, which was helped by a steady labor market. The Commerce Department has said that growth in the gross domestic product, or GDP, which is the economy's total output of goods and services, expanded at a 2.6% annual rate in the second quarter of this year. That's more than double the revised 1.2% pace that occurred in the first quarter of this year. A slow first quarter followed by stronger growth in the spring has been a familiar pattern over the past several years. Because of it, the government began combined efforts to manage shortcomings in the government's seasonally adjustment process. Even with the spring rally, though, economic analysts do not think it will meet the ambitious target set by President Trump, who pledged to boost growth to rates of 4% or better. For 2017, economic experts believe growth will come in around 2.2% for the year, which is where growth has been since the Great Recession began in the mid-2009 cycle. Much of the April through June strength came from consumer spending, which accounts for 70% of our total economic activity. Spending grew at 2.8%, up from 1.9% in the first quarter. The economy also benefited from modest inventory reductions that hindered first quarter growth. In other key categories, business investment in plants and equipment grew by 5.2%. However, housing construction fell by almost 7%. This comes after a surge in winter because of warmer than normal weather. A National Home Builder Association has said that land and labor shortages are limiting the pace of construction, even as the nation faces a shortage of affordable housing. Economists predict that housing will resume growth in the coming quarter. Internationally, the U.S. dollar was weaker at the end of July. U.S. stock futures were pulling back, and the European markets were in negative territory. But the Dow Jones Industrial Average, the S&P 500, and the NASDAQ all hit record highs at month end. Technology stocks have been growing so significantly, but the economists now fear that they may be overvalued, and they're speculating that technology may be due for a correction. A decline in healthcare and industrial stocks also had negative consequences for the S&P 500. Gains in telecom, energy, and the consumer stocks helped to offset those losses. Even so, the rate-sensitive sectors felt broad-based gains after the Fed refrained from raising rates again. That's it for the August Educational Economic Update. As always, if you have questions or concerns about what's been discussed, please give our office a call at 847-426-1077. We'll see you all again next month in September. And please remember that nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call. We're happy to talk. Thank you. Once again, David Schlossberg with Assured Concepts Group, signing off for August 2017.
If you would like to discuss your portfolio or personal financial needs, please contact us at 847-426-1077. Nothing stated in this presentation should be considered an offer of a securities product nor an investment strategy. The advisors of Assured Concepts Group offer securities and investment advisory services through FSIC. FSIC is a member of FINRA and SIPC.